all of my new clients come in, and they're coming in from a single family background or maybe no real estate background, but they're the universal question: how many deals do I have to do before I don't need a sponsor? And by the time they don't need a sponsor, they're going to want a sponsor.
Welcome to Trial to Triumph, hosted by Caleb Johnson, the show about leaning into life's constant testing on your way to realizing your biggest blessings.
How's it going, everyone? My name is Caleb Johnson, host of From Trial to Triumph. Today I am very excited for our guest. We have Eric Stewart. Eric is a commercial loan broker and has been for the last 20 years. And he also has over 1,400 units in multifamily apartments across the Midwest. Eric, welcome to the show.
Caleb, thanks for having me. I appreciate the invite.
Yeah, thanks for being here. So can you give our listeners a brief synopsis of how you got into real estate, and we can just go from there?
Absolutely. It's actually I was focused on finance and specifically the equipment leasing industry. It was an area where I actually got in through the refrigeration business. The refrigeration industry, whether it's walk-in coolers, the food service industry, things like that, they all lease their equipment. And so working in that industry, I started to focus on getting the applications, getting the financing done for restaurants, hotels, anywhere where you'd see the coolers and walk-in coolers, and kind of leaned more towards that finance side, and eventually worked in the equipment leasing industry solely. I got away from the refrigeration industry and really focused on leasing all different types of equipment, and kind of dug into obviously refrigeration, but also built up a large clientele of hotel owners and specifically their reservation systems. And eventually, through those relationships, they started having me look at their overall debt structure. They had me look at their mortgages and things like that. And once I got a taste of assisting them with their mortgages, I wasn't really excited about leasing anymore. I got more focused on doing a $3 million mortgage than a $30,000 lease. Well, from there, it kind of snowballed. The referrals came in. I had a lot of residential mortgage brokers that were sending me their commercial deals because they didn't want to build a whole back room to facilitate their commercial loan requests. And then when things got real sideways back in 2007, a lot of the residential mortgage brokers, they got out of the business. And that's when I really shifted to the multifamily individual investor. That individual he's non-institutional, and they're really focused on building their own multifamily portfolio. And it's been wonderful. It's taken off and grown organically. I'm not the broker that works for the institutions. I'm the broker that works directly for the individual investor. I don't market to real estate brokers. I market to investors because that's where I feel that the value is. And then in 2015, it's when I started investing in my clients' deals as a limited partner. And then eventually that grew into a general partner role. And I started to work on asset management, weekly management calls. And now, we've built a portfolio to where I'm funding the loans and also buying property with clients. And it's been a wonderful run, and it continues to grow. So I'm really excited.
That's awesome. I would really like to understand what prompted you to want to focus on that syndicator, as we call them, right? That individual person that is going to put the deal together, the operator, compared to an institutional organization, because I would think that an institutional organization might have more credibility, more money, and they might be more safe. But that's just my perspective looking on the outside. So what prompted you to work with that individual?
The statement you just made is really insightful, and it's actually correct. in every sense of the word. They are safer. They do have more credibility. They are well funded. They've got the track record. What all that means is they don't need me.
Good point. Hmm.
And that's the reality. As a commercial mortgage broker, the individual investor that's just moving into the marketplace doesn't have the credibility, may not have the funding, doesn't have the relationships. That's where my value is. And as with anything we do, what's the adage? You go where you're loved. You go where you're needed. And that's been a huge component to things working out as well as they have. Is I went to where my value was.
Mm-hmm. And I can attest to that. You've definitely been a great asset for us and our properties that we've pursued, and I can attest to that 100%. Now,
I appreciate that.
Let's talk a little bit about the I think it's so smart when I listen to people, vendors, let's say CPAs, or in your case, loan broker that sees these deals being put together and they think, oh, I need a piece of that. And what criteria when you first started, was there were you more investing in the operator that you knew, like, and trusted, or were you also, or more importantly, looking at the market and the deal?
In the beginning, it was very much the operator. Every deal I did, I could get approved for a loan, and most of the deals were able to raise capital and close. The variable was that operator and the relationship of one of these syndications where, you're in business with these folks for 2 years to 10 years. And even if you're an LP, a limited partner, where you don't have a say in what's going on, they're driving the ship. So absolutely, you're 100% correct. It was the operator that I was investing in.
Okay. And has that? I'm assuming that's still a big part of your business, where you look at the operator. Now, have you maybe stayed clear of some parts of the country? If, let's say, an operator that you enjoyed working with brought a property in Seattle or possibly California, and you said, I really like you, but I don't like the property, I don't like the deal. Are there instances where that's been the case?
There's been instances where I have brought an opinion to the table, and I feel that now I've moved into more of a sponsorship role where I'm the general partner and I'm part of the decision-making process. So I'm getting involved early. Well, I say earlier, but I'm getting involved in the underwriting and a deeper aspect of the deal beyond just the debt. I'm presented with deals where the market may not be my first choice, and I'll bring questions to the table. If they get answered and we get comfortable with them, great. If not, and the group's not comfortable, even better. That's a deal that maybe we don't want to do collectively. But I will say leveraging my team is been a huge asset, and allowing my team to realize their value, leveraging their value, and growing has been, I think, a huge component for success, no matter where the deal is.
Yeah, let's kind of dig into that. Whenever you say leveraging the team, can you give maybe a specific instance, or what do you mean by that exactly?
Not everyone has the same skill set, thankfully. And in the multifamily industry, it takes a team. There are so many facets to these deals. There's broker relationships. There's contracting knowledge. There's market knowledge. There's analysis and keyboard work, and just not talking to anybody and sitting there for 3 hours and burying yourself in the statistics and the analysis of it. And it requires both sides of the brain, right brain handshaking, smiling, gripping and grinning, and left brain analysis of formulas and spreadsheets. Those are different people. And if you are the person that can do both, you don't want to do both. And then there's a necessity. There are specific lender requirements that we have to meet in order to qualify for these loans. Most of them are not, they're non-recourse loans, yes, but there's still borrower requirements that need to be met. And so we build a team for that as well. And I've found that a lot of newer investors coming into the industry, they start out needing partners to fill these voids. And then as they grow their portfolio, they get engrossed in the business, they realize everything involved, they end up wanting partners. And I think it's a really fascinating evolution of the syndicator, because all of my new clients come in and they're coming in from a single family background or maybe no real estate background, but they're the universal question: how many deals do I have to do before I don't need a sponsor? And by the time they don't need a sponsor, they're going to want a sponsor. Mm-hmm. It's just the way it works. Mm-hmm. They're going to want a partner.
That's something that I haven't fully thought about until just now, where you say when they first start off, it's like, I need a partner. I need the person to bring the EMD. I need the person to bring some upfront capital and sign on the note. And now, like you said, you get to that point where you say, I want to work with Eric because Eric makes my life easy. So Eric can, let's say, handle all the loan side of things, and I can just focus on sourcing the deal, or I can focus on asset management. So you can really dial into what your strength is, and other people can dial in on their strength, right? And that's how you can really grow.
That's exactly right. Leveraging that. I mean, for me to say, I want Caleb to come in and source these deals and do the analysis, and then we can talk about it. Talk to brokers, talk to contractors, all of those things that we each bring to the table. That's what a successful crew is. And I mean, it's a universal principle in the industry that it's a team, mm-hmm. It's a team sport.
Now let's talk a little bit about some deals that you have been a part of. And being a part of that many units, I know you have to have some great moments or stories from that. So are you able to talk about a certain deal where you really learned a lot from that deal?
I've learned a lot on just about every deal. There's been it's a rare deal that you just close and it runs itself. No, we've had some deals that were smoother than others, but I can tell you that the smaller deals tend to be more labor intensive. They tend to be more hands on. Smaller deals being under 50 units. You've got a different set of property managers. You've got a higher concentration of movement. You've got less dilution of every event. So if you have 3 people move out of a 30 unit asset, you've got 10% vacancy, right? It's a completely different impact than it is with a 100 unit asset. So I've always been a proponent for somebody just to get in the business, right? And you've got a lot of folks that are looking for 80 plus units or 100 plus units as their first deal. That's okay. But the education that you're going to get from that 20 unit, 30 unit, 50 unit, instead of waiting around for that 150 unit property or that 200 unit property, I challenge somebody to buy, 3 30 unit properties and leverage that education they're going to get. Go in with that confidence of, sure, I can buy a 30 unit. You have that attitude, do 3 or 5 of them, and the education you're going to have is phenomenal. So I found that, to answer your question, that the smaller deals do tend to be more labor intensive, and the lessons are greater.
That's interesting, because there's so many people that are in this industry that talk about, I'm not going to touch a property that's under 100 units. And they've probably, like you said, realized and have taken into account the labor behind that, right? you can, if you just can scale the expenses per unit, it just is more economic. But I don't hear very many people say, go ahead and do a couple of 30 unit deals, and then really you'll learn and kind of get that dirt under your nails where okay, we've gone through this before, and we're not going to have this problem if we go take down a 100 unit or a 150 unit, because there's more flexibility or there's more room to be conservative where you might not otherwise be in a smaller property. Mm-hmm.
Yeah, yeah. It's there. The smaller assets are not as forgiving as your larger assets are, and it's almost self fulfilling, right? When you're just learning how to play golf, it doesn't matter what club you use. You're using it's the technique, and then once you get to a point where you've mastered that technique, then you focus on your equipment. Getting started in this business, doing those smaller deals is going to give you such an education and a confidence level, and it's going to establish relationships, both lender relationships, industry relationships, management companies. It's going to be really beneficial for you. What other industry are you going to make money while you're learning too?
You just got to get started. And I can relate to that, where we closed on a 16 unit in Oklahoma City, which is 3 states to my east. And so it's farther away where I can't walk the property. Now, something like that might turn people away because it is so far away. Now, is there an instance where, or maybe you've experienced this, where the deal is not economic to go to such a tertiary market or go so far, it's just not worth it? Maybe, I've also come into just where there is no good management in that market, or there's not enough companies, so there isn't that competition. And have you experienced that?
I have. I've had some deals presented to me where it was it just the value of going into that market and doing that deal. The only value would be to establish a relationship with that individual that's sending a deal to me. And I found more value in declining, walking through why, and then being there for the next deal and building the relationship that way, rather than jumping in on what I felt was going to be a troubled asset and then trying to fix it and make it work, because it wouldn't have ended well for anyone. Limited economic drivers. You find deals where we're all chasing yield, right? We're all looking for the higher cash on cash returns. We're looking for that blend of a value add on the back end, but we want all the solid preferred returns the whole time we're doing it, right? The best of both worlds. And what happens is we get pushed out from our central business districts and our primary MSAs into these markets where the major economic drivers, the school system, the hospital, and then a Walmart, right? The same dollar just circulates through lunch money, medical bills, and weekly groceries. And if something happens there, as to your point, you don't have the property management firm, you don't have the tenant base, you don't have the employers to get you out of a pinch. You can't change. It's very challenging to change the property's reputation in those markets as well. To your point, yes, I have passed on deals that fit that characteristic, and I've asked the folks that sent me the deal, told them why I was passing, and asked them to pass as well. So hopefully I've strengthened the relationship by doing so.
Interesting. That's good. Now let's talk a little about another subject. And I've, working with you in the last several months, have understood that you are an excellent communicator. And I would love to talk a little bit about how have you learned those skills?
I can tell you that it has not been a conscious decision to do that. I think if if there is a positive communication, it's going to be as much credited to the person I'm talking to and their ability to click with me as it is anything that I say. Because there's a lot of folks that I don't click with. But if there is anything that I happen to be doing right, it's a function of doing it quite often and working with folks that are coming into the industry, asking me questions constantly, and just organically, if over time I repeatedly hear people ask the same questions, I'm expecting it, and I've kind of found a way to explain that in a way that hopefully is easily understandable. But I credit as much to the person that I'm talking to. Somebody that I'm getting a loan request from, in my opinion, is a positive personality, somebody that wants to get in and run their own show, and grow their portfolio. I don't typically have passive personalities come to me for loan requests because they want to get out and buy their own multifamily property and take control of their own financial future. Those are my clients. So they're out looking for information and they want the answers rather than me telling someone, this is what you need to know and this is what you need to do. They want it. And I think that goes a long way.
Mm-hmm. Yeah, that's a great point. I used to work at a LA Fitness where I had two jobs, and I worked at a sandwich shop and a gym. And it was so interesting to see the people that came into the gym. They were upbeat. They smiled. Not all of them, but some of them did. And they just had good attitudes. And then you looked at the sandwich shop place where they came in and they just weren't happy. They weren't, maybe it was the sandwiches. I hope not. But I think that's such a good point that you say is you want to surround yourself with people that are upbeat and that also attest to leadership. A good leader will always bring up their subordinates or the people they're working with. And I think you do that, very well, and you're a very good communicator. So I've learned a lot from you just listening to you.
I'm glad to hear that. I appreciate you saying it, and I'm glad it's been beneficial for you because it's a lot of good questions. I can tell you that you've brought up some points in these deals that a lot of folks overlook. So it's great.
Yeah, praise God. What a blessing. Well, Eric, I think it's about time to wrap this up, but I want to ask you just 3 questions. And the first being, if you can recommend a book to our listeners, what would that be?
A book that's impacted me, and I'm so excited about it. I tell people about it. It's called Blue Zones. It's by a gentleman by the name of Dan Buettner, and he has established a number of cities in the world with the highest concentration of centurions, people that have lived to be 100 or more, studied their lifestyle, studied their diet, studied their philosophy, and brought together the commonalities from all of them. And if there's some type of value that I could give someone that would help them get a couple more years, a couple more happy years, what's more valuable than that? So I think the book Blue Zones by Dan Buettner would have a huge impact on anybody that would even take a little snippet from it and get a little benefit. Hey, a couple extra happy years. What better gift?
Absolutely. I haven't heard of that book, but I'm definitely going to do some research into that. That sounds interesting. And if people want to get in touch with you, potentially work with you, where can they do that?
Well, I can give you my phone number and email. That's usually the best place to do it. I mean, social is always a good connection, but good old-fashioned email or phone call is just fine.
Okay. What's your phone number?
Phone number's area is 800-916 9005. And my email is ERICS, Eric S, at AtlanticIT.com. redsec.com.
Okay, fantastic. And if our listeners can take one piece, if you can give our listeners one piece of advice to take away from today, what would that be?
I would challenge everyone to sit down and give serious consideration to what you want your value point to be on any team that you join. Anywhere, if you can establish what your value point is and hang on to that, you bring that confidence with you. Even if you're in an uncertain room where you're learning new skills, you know what you know, and you know that you have that value to offer any room that you walk in. That is you being in your confident zone. You can step out of your comfort zone, but bring that confidence with you. And I think you're going to be better off. You're going to be more open to learning. You're going to be willing to ask questions, because what stops us from asking questions is we're nervous. We're not confident. We don't want to look like we don't know. But if you can find that value point that you know you're strong in, take it with you, you're going to be confident enough to open up and learn more and ask more and grow.
That's great. Well, Eric, I really appreciate your time today, and we'll sign off. And to the listeners, thank you all for tuning in, and we'll catch you next time.
Thanks for having me, Caleb.
Thanks.
It's time to grab your victory. Find us on the web at redseccapitalgroup.com and follow us on Instagram and Facebook at Red Sea Capital Group.